Stephen Guilfoyle, founder and president of Sarge 986. I always love when he comes in. He's a real detail-oriented guy. You love to follow the headlines, and you're such a guru for the technicals in these stocks. So what are you thinking these days?
Well, I'm thinking that we're a little bit ahead of ourselves on valuation, which isn't a terrible thing. We did see this expanding valuation coming. I'm a little concerned given the headlines over trade, which control right now the long end of the yield curve.
Right.
That could lead us to something, if it doesn't go our way, if it doesn't go the president's way, it could lead to something of a sell-off the first 2 weeks of December. So I would not be shocked by that. I'm actually positioned for it right now because a lot of my targets have actually hit. So I'm actually a little higher on cash and a little skinnier on book than I'd like to be.
Right. See, yesterday we got the nay say, right? Like it wasn't happening a little bit, and then we sold off, and then today we're getting some more positive comments. So we're, coming off of those lows. But to your point, you have a lot of cash, and that's because a lot of the stocks that you had chosen had hit their target, and that's because we're at Dow 28,000, and stocks are hitting new highs. I mean, we have stocks that are at decade highs.
I never thought I'd be out of Apple, out of Disney, out of Roku, all at the same time, out of CVS, which was one of my longtime valuation favorites. I actually want to get back into it, but it doesn't stop going.
So out of Apple, out of Disney, out of CVS, and Roku, all of which have been great performers. Let's get back to our retail. We talked about Macy's, and I know we've had some of the retailers did so well and others not. Macy's gave this week outlook on top of everything else. So what are your thoughts on a big department store?
Well, I'm actually long Macy's. It's one of my dividend names. Obviously, it's not performing for me today. We pretty much have given up our profits of the last couple months, over the last couple of days.
Right.
I don't like Macy's, but I do like the fact that they pay me 10% to stick around.
That's a lot,
They pay $1.51. It's
That's
a
a lot.
$14 name now. So
you have a big real estate presence.
Yeah, and on my way to your studio, I walked right through the 34th Street location just to check it out. I did it last week too. I'm one of those nerds that checks out like parking spots and everything. I used to do my own CPI in Walmart. But anyway, I walked through Macy's and it's just not as crowded as you would like. I'm sorry. You need more of a buzz around there. They have too much unproductive space. They have a big conference, a big investor conference coming up February 5th.
So why are you long the stock? You're just going to sit and take the dividend?
Number one is for the dividend, yes.
Yeah.
Now, if they do ever cut the dividend, forget it. It's going to $9. But secondly, I thought expectations for this quarter were so low that they'd have to beat. Well, obviously, I'm going to have to think that twice in a row now.
Yeah, you're going to have to think about that one. What about Nordstrom, based on your parameters, that is? What about a name like Nordstrom? Just opened up the beautiful Nordstrom here on 57th Street in New York City, but I saw some sell ratings on Nordstrom. Is that? Because department stores overall are having a hard time against e-commerce and some of the other shops.
Unless you're doing the whole multi-channel thing and executing on a very high level with the ability to deliver and to both the stores and the address, like a Target, which is an outstanding name, even like a Walmart, to some degree in Amazon, although they don't have the in-store presence. If you can't do all that, this is going to be a big season for the brick and mortar retailers, because this is really the first season since the shift has gone so far the other way. I mean, I'm a married guy. I'm a married guy for 30 years. My wife used to drag me through Macy's.
Right.
Well, she doesn't drag me through Macy's anymore because she sits in her chair and she shops like this. And she doesn't shop at Macy's either. Their website, which was down for part of the quarter, does not attract the shopper like it used to. Now I don't know where she shops, but I'm sure it's the places we've heard of.
What about Target? You said you didn't expect this move because they did well last quarter and then did well again this quarter.
What a great company this is. Okay, I'm actually short the name right now, and I like the name. I want to be long the name. I waited for a chance to buy it because I sold it after the Q2 earnings, thinking I was so smart.
So you're short it now.
I'm short, but it was a trade and it went a little haywire. So I really do like the name. I'd rather be long it. For the folks at home, maybe novice traders, what a trader does, what a professional trader does when they are short a name and it goes against them, you buy a call.
Right.
Where you want to limit your risk, and you sell a put where you're willing to buy it back. So what I did in this case, when I was trading at 127 and change this morning, I bought a December 20 130s, and I sold the 125s. I wanted to sell the 123s, but it didn't pay the dividend I needed. I needed them to cancel each other out. This way, I can't lose any more than a little less than $5 on that trade, and I'll cover it at 125 if it comes my way.
Yeah, this is what you're supposed to do. You're not supposed, this really hedges, you make money on both sides, you're protected. It's not, you know, so many people just buy a stock and just wait.
No, you have.
And you know, it's really, for the more advanced trader, you really do have
you
a
have
better
to
game.
You have to gas your winners and you have to limit your losers. And the way to do that is through the options market.
The options market. I mean, not everybody understands it, but
I'm happy to explain to anybody who emails me.
It's a great, oh really? He'll explain it. Here's another one, Cornerstone on Demand. Something, you like the chart, is more for the younger people, a deal with Facebook. What's going on with this
really,
stock?
I mean, such an interesting name, and I noticed the chart before I read up on it. I really hadn't heard much about this.
Is this a microcap? What is this? Is it a small one? I don't know it that well.
It's not a big one. It's
okay.
It's trading around $60. The breakout point is around $6.50. It's got a nice cup and handle right now. It's battling with the pivot point. It's trying to break out. It's not quite there. I bought a little bit, about an eighth of a position. I'd like to get in a little larger if I see not a discount. I don't want to buy this on a discount. I want to see it when I'm sure it's going to pass into the buy zone. So if on the breakout, I'd rather buy it on momentum than on the cheap.
Right.
If people understand what that is. What they do, they're approaching younger people. They're training. They're basically political correctness for younger adults. They teach them how to behave in a workplace, how to get by in the modern world, and they do through virtual reality classes that they're teaming up with Facebook on. So they have the backing if they're going to go somewhere.
I like that. AbbVie, quick thought on AbbVie. You like that one?
So cheap. They're diversifying past. They have some patent problems coming up, but they're diversifying to get around that. Trades only about. I mean, I got so many notes here. What 9 times? 5.3% dividend yield, 9 times earnings. It trades below the sector average. I think AbbVie is a great buy. At least I do, because I'm long it.
All right, and I know you're loaded with cash. You're going to be looking for some new places to put it to work. Great to see you, Sarge. Thank you. Stephen Guilfoyle, founder and president of Sarge 986.